Welcome back to Trading Hour. Well, Madanagopal Ramu, fund manager and head of equity at Sundaram Alternate Assets, joins us now to discuss market fundamentals and his top sectoral picks. Good morning, Madanagopal. Thank you so much for joining us. First up, you like quite a few sectors and we'll discuss those in detail. But you have made quite a big play as far as the energy transition theme is concerned, especially as far as the solar module and cell manufacturing is concerned. Going into 2025, how are you looking at this particular space, especially in context of really high valuation that Indian companies are trading at?
Yeah, thank you. And if you look at energy transition, it's a long-term opportunity. I think this is for the first time after decades of investments in this space that you can actually think about expanding capacity without government subsidy. So it's actually gone out of what the sector always looks for in terms of government support. And in that way, the private sector participation can be really big. There is an energy demand that is growing globally as well as in India. And if you can meet them at a really cheap cost using clean energy, then the scope for expansion is very high. Obviously, there are a lot of attraction, a lot of new capacities coming through. There will be some moderation in ROC, say 2 years down the line, because that's when a lot of capacity is coming through. But between now and 2 years down the line, there is still a lot of money to be made, is what we feel. But if you look at the other space in the energy transition, which is EV mobility, we still feel there is not enough capacity coming through. Market is still underestimating the growth potential of electric vehicle penetration in India. And I think next 3-4 years, you will see a big surprise coming there. And therefore, the capacity being on shortage, you will see some of the early investors in this space making good money. So probably we have to shift a little bit more towards the mobility side of the energy transition, and a little bit of cut down on the electric side of the energy transition might be reduced. But overall, the space will keep throwing you a lot of new players and also new opportunities. So it's not a space that you can go out just because valuations are rich temporarily in very specific segments. You have to keep your eyes open there, and a lot of new interesting ideas can come through.
What about solar in particular? There was a recent listing, Vari Energies. Premier Energies has been doing pretty well. On the solar side, what is it that you like? And is there value for next year?
Premier Energies is where we have invested and made a reasonable money out of it. As I said, Premier is a slightly backward integrated player with a cell manufacturing capacity. Pure module is a commodity play, and today they're all making money because of the regulatory support that they have, domestic manufacturing, domestic procurement requirement that is there in the market. Slowly, these things will fizzle out as the market capacity increases, particularly on the module side. Cell will take some more time. I think it will take some more time, and a lot of these players who are talking about cell manufacturing capacity, it is important to see how they stabilize these operations. It's not easy to be a successful, high-quality, efficient cell manufacturing player. So we have to wait and see before jump in on the cell side. But on the module side, I think the current margins are unsustainable, and it will come down in next 2-3 year time period.
So on solar cell manufacturing, which are the companies which are trying to get into it? And if you had to bet on anyone with the highest probability of success, who would it be?
We still feel Premier fits into the bill because it's going to scale up from 2 gigawatt to almost like 4 to 5 gigawatt in next 2-3 year time period. While others are also trying to get in, we have to wait and see how they stabilize their operations and get it done. But I think at this point of time, we'll stick with Premier in this.
Okay. Well, moving on, one space we want to discuss with you is the lending space. You hold a significant stake as far as Five-Star Business Finance is concerned. The stock saw quite a bit of a sell-off after trimming its guidance. How are you looking at that particular space right now? Would you be cautious or would you be looking to build onto positions in the recent sell-off?
See, NBFCs are structural growth sectors. Compared to banks, they will be growing almost 2 times what the growth rate of banks will deliver for you. Because of the financial inclusiveness story, and India is still very much underpenetrated on the retail credit front. This is very clear. Now, beginning of this year, there was a lot of noise around credit quality. A lot of this is nothing to do with the economic growth slowdown and the credit quality worsening because of it, but it has more to do with the spillover that happened post-COVID, and some of the sectors which had a really bad period during the COVID. They got some benefit of regulations, and now that is getting taken away. there is some spillover because of this unsecured lending that went little overboard. We feel that this is going to be restricted to a very specific set of customer segment, and it's not going to spill over. So therefore, this noise on the credit quality issue in the NBFC side will come down. And it will, today, if you look at the NBFCs, they are trading at much closer valuation to banks, despite capability of delivering a much higher growth. Therefore, NBFCs, to me, in 2025 should be a sector to be looked at. Probably next 2 quarters, you have to just wait through. But I think worst is behind. Even in the segment like microfinance, we generally avoid. But what I hear from the market as of now is December has been a reasonably good recovery. It's not a complete recovery; it will take some more time. But I think the fear that was there that it will sort of expand and create more noise around credit quality. I think the peak is behind us in terms of noise. So NBFCs as a space is somewhere we need to pay attention to. See, you don't make money in banks by investing in once the credit quality issue is behind you. You have to be ahead of the curve and try to look at who among those players who can stand out. 5-star in the small ticket lab has been our long-term call. He is growing 5% lower than 30%, but 25% is still a much higher growth, and the stock is trading at 3 times price to book, which is what some of the well-run banks are trading at this point, growing at just 13-14%. So I think there is a lot of value left on the table for these kind of names. And as I said, NBFC as a space itself is very interesting, and some of these stocks look pretty good from a 2025 perspective as well.
Thank you very much for joining in.